Welcome back to Iraqi Dinar, your trusted source for reliable updates, accurate currency analysis, and deeper insights into the evolving global financial landscape. Our focus on the Iraqi Dinar, IQD, Vietnamese Dong, VND, and their role in emerging economic transformations continues to help readers and investors stay informed and strategically aligned. We are at the threshold of what may be a significant turning point, not just for individual investors or foreign exchange watchers, but also for institutions, multinational entities, and governments tracking the shifting tides of global finance. What once seemed speculative is fast becoming a subject of serious economic discussion. Long-dismissed currencies are now commanding attention, offering new frameworks for understanding wealth, investment, and national growth. The concept of currency revaluation, once relegated to the corners of internet forums and whispered conversations among hopeful investors, is entering the mainstream. Recent developments, including key analyses from influential voices such as Frank26, are reinforcing a powerful narrative. The global financial order may be undergoing a quiet but profound shift. The Iraqi dinar is reportedly pegged at $4.58, while the Vietnamese dong stands at $3.77. These figures, previously treated as rumors, are now being examined as potential reality, with institutional movements and credible data lending them unexpected weight. This isn't simply about high returns or bold speculation. It's about a broader realignment of how nations are valued, how their currencies reflect economic stability, and how long-overlooked economies are stepping onto the world's stage with a renewed sense of purpose. Financial communities across platforms, Telegram, Discord, specialized investor forums, are experiencing a surge in activity. Strategies are being updated, portfolios reassessed, and long-dormant positions are suddenly under review. Iraq's case is especially compelling. After years of economic turmoil marked by war, sanctions, and internal corruption, the country has been implementing significant reforms behind the scenes. The Central Bank of Iraq has established stricter regulatory frameworks and improved its monetary policy. Inflation has been steadily managed through disciplined fiscal approaches. Oil exports have increased due to infrastructure upgrades and new international agreements. Digital banking tools are now reaching more of the population, and mobile payment systems are beginning to take hold. These behind-the-scenes developments have helped build the foundation for what now appears to be a transformational leap. A moment when Iraq is no longer seen as a fragile, war-torn economy, but as an emerging The reported exchange rate of $4.58 sends a strong message to the global market. Iraq is asserting control, demonstrating stability, and earning trust. This development influences not only currency traders but also broader economic sectors. Foreign investment, trade policy, import dynamics, and domestic purchasing power. For Iraqi citizens, this could mean tangible improvements in daily life, from better job prospects to greater access to goods and services. For businesses, it introduces new pricing strategies, improved capital mobility, and expanded access to international markets. Importantly, this financial resurgence is not an accident or the result of isolated policy decisions. It reflects a deliberate, multi-year strategy aimed at economic recovery and global reintegration. Since the early 2010s, Iraq has been rebuilding state institutions, increasing transparency, and actively engaging with the International Monetary Fund, the World Bank, and other global financial bodies. Much of this work has taken place outside the headlines, but its impact is now coming into view. Improved credit ratings, streamlined foreign investment frameworks, and debt restructuring are just a few examples of how Iraq has laid the groundwork for sustained growth. Frank26, a veteran analyst who has long tracked the movements of Iraq's central bank and its international engagements, recently confirmed these new exchange figures. Information that has sent waves across investor communities and institutional channels alike. This is not merely market noise or speculative frenzy. It is the culmination of deliberate, data-backed reforms, and it points to a recalibrated view of Iraq's place in the global economy. Vietnam's rise offers a parallel story. The Vietnamese dong, long overshadowed by the dinar in investment discussions, is beginning to gain recognition in its own right. With a reported exchange rate of $3.77, the VND is stepping forward as a credible currency backed by decades of disciplined growth. Vietnam has built its reputation as a manufacturing powerhouse, offering a strategic alternative for global supply chains as companies diversify away from China. Foreign direct investment has poured in, and Vietnam's export-driven economy has remained resilient through regional and global shocks. Vietnam's monetary policy, historically focused on keeping the dong undervalued to maintain trade competitiveness, is now responding to new economic realities, strong domestic demand, technological innovation, and robust financial infrastructure. The revaluation of the VND signals international recognition of this progress. What was once a speculative play is now being re-evaluated by investors, institutions, and policymakers as a strategic asset with long-term potential. Digital finance is another dimension of this transformation. Both Iraq and Vietnam are exploring central bank digital currencies, CBDCs, as part of their modernization efforts. While Iraq remains heavily reliant on cash transactions, it has taken meaningful steps toward digital banking and mobile payment adoption. Vietnam is ahead in digital integration, piloting blockchain-based financial tools and pushing toward broader financial inclusion. These digital efforts are not just cosmetic upgrades. They reflect a deeper desire for monetary control, cross-border integration, and real-time economic responsiveness. The reported exchange rates could serve as foundational benchmarks for future digital currency equivalents, offering enhanced liquidity, transparency, and efficiency. They also serve to attract a new class of investors, crypto funds, fintech innovators, and institutional players looking to tap into the future of digital economies. As interest in the IQD and VND grows, so too does the need for caution. Investors should be aware of the regulatory environment in their jurisdictions. Exchange procedures are expected to vary depending on location, volume, and institutional policies. Some banks may require documentation for large conversions, while others could enforce holding periods or apply capital gains taxes. Scams and fraudulent exchange services are likely to surface during this transitional period, making due diligence and consultation with financial professionals essential. Understanding the actual value you receive during conversion, after taxes, fees, and rate spreads, is just as important as tracking nominal revaluation figures. Strategic planning, not impulsive action, will determine who benefits most from this unfolding moment. Treating this opportunity with the respect it deserves means being prepared, well-informed, and deliberate. Despite the momentum toward digitization, Iraq's central bank has confirmed that the physical dinar remains legal tender. This is a critical assurance, especially for overseas holders and rural populations who still depend on cash. A gradual transition is underway, one that blends traditional currency with emerging digital tools to ensure economic continuity. Retailers, banks, and public services are being encouraged to support both formats, and educational campaigns are expected to accompany broader digital rollout. The evolving financial story of Iraq and Vietnam is not just about policy, profit, or speculation. It's about people. Workers, entrepreneurs, reformers, and everyday citizens who have endured years of instability and uncertainty, yet continued building, innovating, and believing. These revaluations are more than numbers. They are symbols of economic dignity earned through struggle and perseverance. Iraq is now stepping out of the shadow of war into a position of regional financial leadership. Vietnam is affirming its role as a rising industrial and digital economy. Together, these nations demonstrate that emerging markets are no longer defined by volatility alone. They are maturing, innovating, and competing on the global stage. Those holding IQD and VND through years of uncertainty may now be part of one of the most significant financial realignments of our generation. This is not merely a moment to observe, it's one to understand, prepare for, and act upon. The future of global finance is being rewritten in real time, and those who pay close attention now may play a role in shaping what comes next. We encourage all members of our community to stay connected, subscribe for real-time updates, and engage actively with credible sources like Iraqi Dinar info. These developments are not only noteworthy, they are potentially transformative. In a world that's evolving fast, staying informed and making intelligent decisions is the clearest path to long-term success. Let this be a milestone, not just in financial gain, but in understanding. The world is shifting. Iraq and Vietnam are rising. And the currencies you've held may soon reflect more than just numbers. They may reflect history